And when you say, Bitcoin is going to be worth $500,000, what do you think needs to happen to go from 20,000 to eventually getting to 500,000?
So I think it's just more time and education and more data points. But how I get to 500,000, it's very simple math.
Tyler Winklevoss, Bitcoin price prediction, and Bitcoin's road to $500,000. In this video, Tyler Winklevoss, one of the Winklevoss twins who you may recognize from the social network and co-founders of Facebook, explains his Bitcoin price prediction and how it makes it to $500,000. The Winklevoss twins have been long-time Bitcoin bulls, holding 1% of all Bitcoin in circulation, and the founders of the Gemini cryptocurrency exchange. The Bitcoin holdings of the Winklevoss twins is valued at $8,800,000,000 as at the time of this video. Wow. Stick around to the end of the video where the twins explain their Bitcoin prediction and the thesis behind their valuation. Also, only a tiny percentage of people who watch my videos are actually subscribed. If you enjoy the video, consider subscribing. It's free and helps out the channel immensely. Enjoy the video.
The market cap of gold is 9 trillion. So the entire supply of gold is priced at 9 trillion. If Bitcoin is gold 2.0 and it disrupts gold, then its market cap also has to be 9 trillion. But today, Bitcoin's market cap is 330 billion. So it's got to increase somewhere like 25 to 30x from here.
Yep.
So put on a 25 to 30x multiple on the price of a Bitcoin today, which is, let's say, 18,000, 20,000. That easily gets you to $500,000 of Bitcoin. So if we're right that Bitcoin is better than gold, and the way we get to that is we look at the characteristics of why people find gold valuable. It's scarce, it's portable, it's divisible. Bitcoin's better than scarce, it's fixed. You can send it like email. You can divide a Bitcoin into 100 million pieces. So across the board, all of the reasons why humanity has found gold valuable for the last multi-millennia, Bitcoin beats it. So it should be worth as much or more than gold. And for that to happen, a Bitcoin has to be worth $500,000 a Bitcoin.
I totally makes sense. When it does reach the point when it gets to $500,000 a coin, like what does it look like from the consumer behavior? Are people spending it? And how do you think it will be used when it gets to that point?
So that is a great question. A lot of people wonder, do you have to buy things, spend Bitcoin? Does it have to be used as a currency for it to get there? My answer is no. Nobody buys coffee or goes to McDonald's and buys a Big Mac with gold. Gold is seen,
store of value.
Yeah, it's a store of value. You got it. But one day, a long time ago, before the invention of fiat currency, gold was brought to the market, and it was a commodity money, but we recognize it's a better store of value. So if Bitcoin just becomes a mature, better store of value, I think we see 500,000 a Bitcoin. If it's also used as a currency, there's efforts like the Lightning Network and other sidechain projects. If you can also use Bitcoin as a currency, the value actually goes up much higher. If it can be both a store of value and a way for a currency to work on the network. There are other instances too where Bitcoin itself, the network, could be like the substrate of other networks, and just the security of it, it would basically become like the digital global reserve currency of all crypto.
Yep.
Then it's even higher. So when I say $500,000 of Bitcoin, that's actually the conservative case. It could easily be a couple times more, or even order of magnitude more. And by the time it gets there, like, you're never selling your Bitcoin. If you need to like use fiat, or I sort of say cash is trash, you'll just be able to borrow. And today you can borrow off your Bitcoin, get the cash, spend it without selling the Bitcoin. So I was listening to this podcast and they were joking about like this Bitcoin meme of the Matrix, and like, you know, when Bitcoin gets to like 1 million, like you won't have to sell it kind of thing. Morpheus and Neo, like Neo's like, what happens when it gets to 1 million? It's like, you won't have to sell it. So anyway, I think we've been hodlers, that's the term for holding, since 2012. And I was on CNBC Squawk yesterday morning, and the interviewer asked me, Seema Moody, she's like, what have you been doing to prepare, like now that Bitcoin's at 18,000? I was like, I've just been hodling. Like, it's just being patient. And I'm going to hodl all the way to 500,000, and I'm going to still hodl because if I need US dollar shitcoin, I can always find another way to find it. But like, Bitcoin it's like a multi-generational asset. You know, we are at the dawn of something as significant as the internet itself. The problem with the internet is that you couldn't buy a piece of it. You could buy like a domain name, you could sort of squat, you could get like, I don't know, cool.com or podcast.com, even though podcasts weren't a thing back then, but if you knew that they were.
Funny you say that. I was literally looking up podcast.com yesterday and it was going for like $1 million. So funny you bring that up.
Right. But that's like owning a piece of the internet, but it was kind of hard. You had to invest on the application layer, the companies on top of it. But wouldn't it have been nice to just buy a coin that represented the internet?
Totally.
Well, fast forward to 2010, the invention of Bitcoin, you can literally buy a coin, a Bitcoin or a fraction of one, that indexes or canvases the entire Bitcoin ecosystem without having to pick what company is going to work, whether it's going to be Gemini or Coinbase, or, you know, it's sort of like owning a piece of the racetrack without having to bet on which horse is going to win. As long as the races are running, you make some money. And so Ether is the same thing for indexing a piece of the Ethereum network, which is a digital or decentralized global computer. A lot of people equate Ether to digital oil. So if you want to get into the crypto game, my suggestion is own some Bitcoin, digital gold, and own some Ether, digital oil. And with those, you have most of your bases covered.
Love that. And with Ether, I know it's, you know, not as talked about in the media, but when it comes to the predictions of where Ether can go and how it's utilized and where it could be from a price perspective, like, what's your thoughts on that, on where Ether could go from a place of value?
So I think it's very high. In some ways, I haven't done like math on that lately. So for disclosure, and we've talked about this before, that we have material stake in Ether as well. Like you mentioned earlier, the media loves Bitcoin because it's easier for consumers or readers to understand that, and they harp on that, and that makes sense. But what's less talked about and less known is that we are huge fans of Ether, or Ethereans, if you will, in the slang. So look, I think Ether has tremendous capabilities because Bitcoin's digital gold, right? It's sort of moving value from A to B, and there doesn't seem to be a huge appetite in the community to experiment or sort of screw it up, right? It's like, we've got a good thing going. Let's not run too fast. Let's not be too exotic. Whereas Ethereum is like it's a decentralized operating system. So the promise is that you can create these applications on top of it, permissionless. The same way you could build an application, I don't know about anymore, but back in the day, you could build a company on top of Facebook. So companies like Zynga, which actually IPO'd and was worth, I think, at least $1 billion, was a company built on top of Facebook. So most companies today are built on top of a cloud computing service like Amazon. So you rent space from Jeff Bezos and Amazon. Ethereum is a decentralized Amazon where you can build your applications there and you run the computing power by owning Ether. Instead of running your credit card through Amazon Cloud, AWS Web Services, you just pay the network in Ether. it's not centralized. It's not a company. It's a decentralized network, and you can you could create decentralized Twitter on it. You could create decentralized Facebook, decentralized whatever. No one can stop it. No one really controls it. It's owned by the users. That's the beauty of cryptocurrency, is that the value accrues to the people who use the network, not just a few people in a company in Silicon Valley.
Yeah.
So, Ether's got to upgrade. It's moving to ETH 2. There's some scalability things that it's got to work through. But like, I'm an optimist, and the smartest folks in the room are working on it. So if Ether is your global computer in the future, what's that worth? It's got to be a ton, and it's got to be worth as much as digital gold, I would think, maybe more.
Love that. I know that you tweeted earlier, you said the trade of the century is still available. The next few hedge funds who take 100 mil or greater in Bitcoin will become the best investors of their generation. What's your, I would say, thoughts on that on a deeper level when it comes to the type of hedge funds, and why haven't they done that yet if it's something that could be so simple the way you make it sound? But what is the drawback from these big hedge funds, you think, on putting $100 million into Bitcoin at its current state?
I think there's no drawback. I think the drawback is not doing it. Why I think there is friction to do it is crypto, Bitcoin, it's newfangled, it's exotic, it's risky. A lot of people write it off. They don't look closely enough at the legalities of it. The fact that it's been legal since 2015 in the US is like an unknown fact. So a lot of people sort of worry about it. I think also, like, a lot hedge funds generally run out money from other people. So they sort of need to get like some sign off maybe from their investors. And you can imagine that like people who are investing a fair amount of money in hedge funds might be older. What I've noticed a lot is that like there's definitely a generational divide between those people who get crypto immediately and don't. I've never met a Gen Zer who's like a skeptic on crypto. They're like,
I agree.
You guys grow up on the internet. Like, you go to like raves and Fortnite, you hang out like in the metaverse. Yep. You have Xbox credits, all this stuff. Like, you're like, cash? Why would I ever want that? It's like a vinyl record to you, or a CD. Like, I grew up with CDs and tapes, and you guys probably didn't even have that. So you get it, right?
Totally.
But the boomers, they grew up with gold. They grew up before the internet. And so they're just, and I think what happens is you work your life, you build a career, you climb this mountain. And then all of a sudden the world's like, wait, this mountain's not that relevant anymore. It's over here. And it's very difficult to give up this mountain, walk down, and then to go climb this other one, especially when you're 50, sitting up 50, like 60, 65, 70. You're like, wait, but like, my whole life I'm invested here. So you kind of fight against the change in the new. And so when something like big like Bitcoin comes out and is like threatening, or crypto, to disrupt like your relevancy, your skills, it's the innovator's dilemma. It's like, you develop this core competency, but like, why would you give up this franchise business? And generally what happens is you sort of ride it out in this slow decline, and hopefully, you maybe die before it all goes away. But like, it's very rare for people later on to be to disrupt themselves, which is what you have to do as a person to keep growing, and what you have to do as a company to keep growing. And the companies who do this the best are the ones that do the best. So Amazon, they talk about being a day one company always. They're always day one. It's always the first day, because day two is like the beginning of the end.
Totally.
And the companies who don't, like, they become, they just don't make it. They don't stay relevant. And in tech and in money, the adoption lifecycle curves are moving so fast that your lunch will get eaten in like not that long of time, like 5 or 10 years, and it's like you're done.
Yeah, 100%. And I think you're so on point with that. I'm 20 years old for reference, and when I first heard about crypto in 2017, it was easy for me to adopt and say, okay, this makes sense because, I've had the digital version of cash just on my phone, right? You go to your bank account, you see it's digital, and so to this day, I don't carry cash. So I think you're speaking right to my generation when it comes to the adoption, similar to social media, right? It was easy for me to get on social media and to start using it when I was 13, 14, but for my parents or grandparents, it's foreign. They don't get it. They don't understand it. They're on that other mountain, right? And I'd love to talk on that. I'm a huge, I guess you could say, when The Social Network came out, I was a big fan of the movie. And I want to speak on the transition from being on top of these different mountains, one of them being Facebook in your perspective, and now Bitcoin early on. Just what do you think makes you and your brother able to see these cutting edge technologies and bring it all the way back to the early days of Facebook? How were you able to, find yourself in those positions?
Yeah, so I think curiosity is super key. We also have this value called beginner's mind. One of our values at Gemini is beginner's mind. Just always staying a beginner, because people who are experts, they have assumptions, they have experience, which means they're sort of biased and they have judgments. So when we were starting Gemini, I met with a bunch of people in capital markets to understand exchanges and markets. 3 self-made billionaires from outside of crypto capital markets basically told us it wasn't that great of an idea. And to their credit, since then, they've sort of said, "Oh, we were wrong." Congratulations. But the thing is, they knew too much in a way. So in equities exchanges, in equities, when you buy a stock, you have an E-Trade account with a broker dealer. That you place an order, it goes to NASDAQ, which is the matching engine, and then it's cleared by DTC, and then it's custodied by State Street. In crypto, all those 4 different businesses are vertically integrated into one. So at Gemini, you open an account, you place an order, it goes to our matching exchange, we clear, we settle, we also custody. So that whole loop in an equities market, which is 4 different parts, maybe even more, is all one part of Gemini. So we own the full stack. They took their framework from equities and were like, oh, they heard the word exchange or platform or whatever, and they're like, oh, well, that's not that great. We didn't know what that was. We're just like, how do we make it easy for people to buy, sell, and store cryptocurrency? So I think beginner's mind's huge. Another way of saying that is first principles. You probably hear that a lot if you hang out in Silicon Valley. So coming at things from first principles, being just open-minded, curious, and recognizing that the only thing that you can count on in this world is change, and how things cycle over.